right, I'm excited to share with you the newest stock that I bought last week, and that is Pinterest. And in this video, I'll describe a little more in detail about why I chose Pinterest as a stock to purchase last week. I'll share with you my proprietary discounted cash flow valuation model, which calculated the fair value of the stock to be significantly undervalued right now at current market prices. And I'll share with you a few of the other details that led me to purchase this undervalued growth stock for my personal portfolio. So let's jump into the details.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the reasons why I've liked Pinterest, and I actually have been rating Pinterest as one of the best stocks to buy all year long. So I ranked Pinterest on my list of top stocks to buy this year all the way in January. So I've been sharing with you my bullishness on Pinterest stock all year long. And so one of the reasons why I've been excited about Pinterest as an investment is because of the revenue growth and the growth of the business overall. Revenue has increased by a compounded annual growth rate of 33% between 2017 and 2025. Pinterest generated $3.9 billion in trailing 12-month revenue, and that's still a fraction of the big giant in the social media industry, Meta Platforms. Pinterest is also growing in the most lucrative segment, which is in the United States and Canada. It's added a few million monthly active users from that region, which is difficult to grow inside because it's such a saturated market already. But Pinterest is finding new users in these regions. Overall, the company generates revenue, of course, from advertising, as most social media companies. Most of them, over 90% of their revenues are generated from advertising. Pinterest is no different. And the advertising industry is a massive industry. It's estimated to generate roughly $1 trillion in global spending this year. And that's expected to increase by roughly 8% next year. And my personal estimate is that the advertising industry will continue growing into eternity. Eternity. That might be the only industry where I can make that kind of prediction and forecast, because so much of our worldwide economy, everything based on advertising. Now, there might be a year or two where advertising spending declines. For instance, during the severe recession, I think in that year or maybe 2 years, ad revenue might decline. But over a 10-year stretch, I don't expect to see any 10-year stretch where advertising spending is down forever. And that's something that I don't think I can say for any other industry. Needless to say, the advertising industry is one of my favorite industries for investment, and Pinterest is another holding. I already own Alphabet stock for, again, some of those same reasons, but Pinterest, for that, I like the industry. I think there's significant potential in that. 3.9 billion in a $1 trillion industry. Pinterest is still a tiny fraction, so it has room to continue growing if it continues executing on its business model and delivering incremental innovations that keep users coming back and engaging for longer and longer time periods. So another reason why I've liked Pinterest is because of the improving cash flow to sales ratio. And I've shared with you here Pinterest's improving cash flow to sales ratio. And I've also brought in Meta Platforms so you can see the potential of this industry and how lucrative it can be. So Pinterest OCF to sales ratio has improved from negative 22% all the way up to 28% between 2017 and 2025. And I think there's room for Pinterest to continue expanding this margin. As you see, Meta Platforms has a margin at over 57%. Over 57%. And that's with the company's massive investments in artificial intelligence, and prior to that, massive investments in the metaverse. And so Meta Platforms margins could be even better if it wasn't investing so aggressively in growth. This is a very lucrative industry. The content that goes on the platform is created by folks like you and me. they don't pay us to create that content. The engagement on the platform, when we look at things, when we make comments, hit the like button, and share, all of that adds to the company's engagement and the ability to show advertisements and generate revenue. And again, we don't get paid for any of that. And so it's a lucrative business model. User generated content is free for the most part, but yet it generates billions of dollars in revenue for these companies. And it's just a positive, virtuous cycle that benefits from network effects. The more people on the platform, the more engagement, which brings more people to the platform, which creates more engagement. And it doesn't cost the company hardly a thing to get people engaging on the platform. That incremental comment, that incremental post doesn't cost Meta or Pinterest or any of these companies hardly anything. And that's why these businesses can be so lucrative and so profitable, especially once they reach a certain scale, which Pinterest and Meta have already reached. And then growth from this point is so much more lucrative because they've already spent so much on building the foundation that they don't need to spend that much more on foundational products or foundational infrastructure. They can focus more on customer acquisition and incremental improvements to the platform. Of course, valuation, if you, many of you, thankfully, and I'm grateful, many thousands of you have purchased and read my book. And you'll know that valuation is one of the most important things to me in my investing framework. And valuation is very attractive for Pinterest. It's trading at a forward price to earnings of 18, which for a company that's growing revenue, that's grown revenue at that compounded annual growth rate and still growing revenue in the double digits with opportunities to continue expanding, growing revenue in the double digits with operating cash flow margins approaching 30%. That's a very attractive combination. And to be trading at this valuation, I think it's very attractive. And then when I look at my calculation for the proprietary framework that I use to evaluate stocks, I calculated a fair value for this business at $87. The current market price is $35. So this is around where I bought my shares in the mid $30. I bought Pinterest stock last week. So for all these reasons, I was very attracted to Pinterest. I've been attracted to Pinterest all year. Been waiting for the right time because there was other companies I wanted to buy before I bought Pinterest, and those were Nvidia and Uber, which were also on my list of top stocks to buy. Those were my previous two purchases this year, and Pinterest is now my latest purchase. Again, Pinterest has been on my list of top stocks to buy all year, and now it's also in my portfolio. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.